Hello traders, in this video I'm going to be looking at a good strategy for trend trading using two very popular indicators. The indicators are the Supertrend and Stochastic Oscillator. I think they complement each other very well. The Supertrend, as the name suggests, is a great tool for identifying long-term trends, such as this one you see on the Euro-Dollar 1 hour chart, a nice bullish upwards trend. However, you would need to be looking for entry points into this trend, something that the Supertrend indicator doesn't actually do by itself. Whilst it can show you the direction of the trend, it doesn't necessarily give you the perfect timing for entry and exit. Yes, you could enter every time price crossed the Supertrend indicator, but you would find in ranging markets such as this one, you can get taken in and out of trades and you're not really trading the trend, you're just hoping to catch the beginning of a big move. More often than not, you will get stopped out. Okay, so now that we've seen a good move forming here, we'd want to be looking for entry points. Whilst you can use support and resistance as levels for entering on a pullback or on a breakout, for those of you who prefer the visual appeal of indicators, the stochastic is a great tool for entering into trends. So the Supertrend has showed us a nice upwards trend here. When would we enter? Well, if we take the stochastics, you have two levels. You have here is the overbought level. When the stochastic goes above this level, it suggests that the market is overbought and we may be seeing a reversal to the downside. On the contrary, when the stochastic is below this level here, it's said that the market is oversold and we could expect a move upwards. Whilst this isn't the case 100% of the time, it can be a good way to give you an edge on the market and to time your entry into trends using the Supertrend indicator. Okay, so let's use this trend as an example. First off, if we mark off every time the stochastic was in the oversold zone as a potential point where we would look to enter into the trend. Here is not necessarily in the oversold zone, but it's close enough, and there's a crossover of the main line and the signal line in the stochastics, which is extra confirmation of a change of trend direction. So here again, these two lines are crossing, price is in the oversold zone of the stochastics. By the way, the stochastic is using the default settings 533. Again, crossover in the oversold zone. And I think that's enough for this particular trend, because up here the Supertrend indicator turns red, price crosses on the other side, which suggests the trend is coming to an end. Now let's take a look at each of these entry points in this particular trend. Ideally, the first entry would have been the best. This particular circumstance, we could have got potential 200 pips plus had we entered there on the stochastic cross in the oversold zone. At the same time, the Supertrend is suggesting that we are seeing an uptrend commencing. In this instance, we could have placed our stop loss below the Supertrend indicator or below the last level of support here. If we would have gone for just below the Supertrend indicator, we could have had a 10 pip stop loss, which is really, really conservative and good for the 1 hour chart time frame, especially when you consider how far the market moved. That gave us a really good risk to reward ratio on that trade. Another thing is, let's say you had a risk to reward ratio of 3 to 1, which is very good. It means your winning trades are 3 times greater than your losing trades. However, in this instance, that would have meant you would have been exiting at 30 pips, which is around here. 10 pips stop loss, 3 times risk reward, 30 pips. And you can see that would have been a very premature exit, which would have left a lot of pips on the table. So how can we avoid this? What you could do is you could use a trailing stop. And a good place to put the trailing stop is the other side of the Supertrend indicator. If you see, we trailed the stop all the way up on the other side of the Supertrend indicator. We could have caught a trend all the way up to here. In fact, I'd go as far as to say in here, because we would have probably given some leeway below the Supertrend indicator. Let's say we got taken out here and we entered here. I mean, that's 130 plus pips. Not bad for a trend that lasted around a week. Okay, now, as I said, that would have been the ideal opportunity to enter that particular uptrend. That being said, if you wanted to wait for further confirmation of the trend, you could have entered on the second crossing of the stochastic near the oversold area, which is here. Again, that still would have allowed you to catch 130 plus pips on this particular move, with the extra security of seeing that the trend is already confirmed. You could have placed your stop loss again, the other side of the Supertrend indicator, 10 pips, not bad, and you would have had a really good risk to reward ratio. Same principle applies for the third entry opportunity. Cross over the stochastics in the oversold zone in coordinates with the Supertrend indicator going in an upwards trajectory. Is green, price is above, we're in a clear uptrend. Stop loss on the other side of the Supertrend indicator, again very tight at 10 pips and 100 pips plus, not bad at all. The final cross, I mean, by this time the trend has been going on for a while. Some may argue that it's exhausted. There still is an opportunity to catch 60 odd pips. However, if we were to place a stop loss on the other side of the Supertrend here, we would have been taken out more likely than not. However, we could have re-entered here and made back those 10 pips and more. I mean, one way we could have avoided this particular scenario happening is by using price action. So a good price action to use in coordinates with the Supertrend indicator and the stochastic could be support and resistance levels. Okay, so let's take this second entry here. If we put down the resistance level there, we have the pullback. We see, first of all, we see price hits the resistance. We have the pullback as shown by the stochastic. If we wait for price to break through that resistance, that could be the entry point. As you can see here, when price did break through, it broke through with some force, which suggests that quite a few traders would have been watching this level. We did have some price action here with that bar showing that the bulls are pushing the market upwards. Again, if we move the resistance level up to here, we have the stochastic pullback into the oversold zone. If we wait patiently, we can see that the resistance held up there, price came through, but again, when it broke out here through this resistance level, is almost an identical scenario to this one. It broke out with some force, and that would have been a good time to enter. The stop loss in this instance would not necessarily need to be below the Supertrend line. You could place it the other side of the resistance, which more often than not can become a support level if it's strong. Otherwise, you can put it below the swing low, which is here. Okay, and the reason I mentioned this support resistance entry is to avoid the particular scenario that happened here on the stochastic trade without the support resistance. If you remember correctly, had we entered on the pullback of the stochastics here, we could have been taken out there. But if we were using our support and resistance method and we marked off the resistance, we wouldn't have entered this trade just yet. We would have waited for price to breach the resistance level. Again, as we've seen in the two previous scenarios, it did here with some force, and we would have gave ourselves that extra confirmation before taking the trade and not have got stopped out around this area. Okay, I just want to show you an example using the Supertrend and the stochastic for a sell trade. As you can see here, price falls below the Supertrend, which is red, suggesting a downtrend. However, we don't just jump blindly in. As soon as that happens, we wait for an entry based on a crossing of the stochastic oscillator above the overbought areas. So that would be here and here. Okay, on the first one, we can see that the Supertrend had actually turned green and price had gone above, which would have eliminated that as a potential trading signal. So we can remove that one. On the second crossover of the stochastic in the extreme overbought zone, the price was also below the Supertrendindicator, which was red, suggesting we're in a downtrend. I mean, you can just look at the chart and see that the market is in a downtrend for yourself. It's all about timing the entry into this trend. As we can see, there's been some market consolidation here. However, the entry on the crossover of the stochastic, same as we did for the buy trades, would have been a good entry point into this downtrend. We could have put the stop loss the other side of the Supertrendindicator, again around 10 pips, and this downtrend continued for almost 100 pips, which would have been a good move with a very good favorable risk to reward ratio. For extra confirmation, you could have put a support line down here and waited for price to breach that level as it did here, and that would have been another good entry point. You could have also used the Supertrend as an area to trail your stop loss and still have caught a good move. You may have waited for more consolidation around this area as a potential exit as well. And in fact, you could have confirmed the stochastic crossover here by watching this resistance level, because as you can see, 1, 2, the third time it doesn't even reach that area. And with these chart patterns showing that the bears are beating the bulls, this could have been extra confirmation if you needed it to enter the sell trade around this area here. So we had basically multiple confirmations that this area would have been a good time to enter this particular downtrend, which is why I think it's vitally important that you use additional analysis, not just the Supertrend on its own, and as always, use smart money management. If you don't use such additional analysis, you can end up in situations such as this one just after, where the market is ranging, and if you're trying to enter a trend early on in such ranges, you're going to get chopped in and out of the market and hit your stop loss unnecessarily. So You can combine the Supertrend with the stochastics, along with support, resistance, and price action, and as always, good money management, to create a good trading system that can be used on any trading instrument and chart time frame. I personally find that the 1 hour charts and above give more reliable signals when trading, and also means you have less time having to watch the charts. You can even set alerts on the Supertrendindicator so that it will let you know when it changes from one direction to the other. I hope you have found this video useful. Please like and subscribe for more. Thanks for watching.